A potential big win for Silicon Valley today. The SEC approving the New York Stock Exchange's plan to allow companies to raise capital through direct listings. That move was cheered on Twitter by tech investor Bill Gurley. He joins us now for an exclusive interview. Bill, welcome. We talked to Stacey Cunningham of the NYSE last hour. People like you are very excited, though some might wonder if VCs are obviously excited because unlike in an IPO like this, you can sell on day one. You don't have to go through a lockup period. Is that part of the reason you're happy?
Well, first of all, I'm thrilled, and thanks for having me on, Scott and Sarah. No, the primary issues with the traditional IPO are twofold, and the SEC nailed them both in their draft today, which is that it doesn't provide access to all investors. It's just a select group of people that happen to be the biggest customers of the investment bank. And the price and allocation are determined by humans just guessing, which makes no sense whatsoever in the modern age. So the direct listing gets rid of both of those. I think those are the two primary components. And it's really, really exciting because I think in a lot of ways this will be a permanent change to our capital markets.
Though some are wondering if direct listings give companies the ability to circumvent some investor protections that come with the traditional IPO process, potential investor lawsuits. What would you say to individual investors on that?
Well, as you may know, the Council for Institutional Investors, which is a lobbying group on behalf of the hedge funds and the buy-side funds that reap the benefits of these exploited IPOs, they laid out all those arguments in their fight with the SEC to try and block this innovation that Stacey and the NYSE are bringing forward. And if you take the time, and I would encourage you, it's not that long, to read through what the SEC wrote this morning, they shut all those points down and said it's much more critical to have a fair and unbiased process and embrace those two key points I made. Let's provide open access to anybody. In the future, you'll be able to go on Robinhood, and if you want to participate in an IPO, you can. And then let's not let these intermediaries and gatekeepers hand allocate who gets this underpriced stock. Let's let supply and demand matching, which unfortunately have been available order matching systems for over 20 years. But now they're going to be part of the IPO process, which, by the way, is the exact same way every corporate bond has been priced for years. And so those liability questions would apply there as well. I just think it's a bunch of BS arguments put in a way to try and keep this unfair process going.
I mean, is there a time, Bill, where you see the traditional IPO process literally going away and companies choose these other options? Unquestionably.
I can't imagine in my mind, when you can do a primary offering through a direct listing, why any board or CEO or founder would choose to go through this archaic process that has resulted in massive one-day wealth transfers straight from the founders, employees, and investors to the buy side. I mean, in 2018, it was $6 billion. In 2019, it was $7 billion. This year, it's going to be over $34 billion in one-day giveaways. If you want to talk about legal issues, I think people are going to come after boards for fiduciary duty violations for knowingly entering into a process where you're selling a corporate asset at a massive discount. Go away.
But there's a whole menu. It's not just. Yeah.
Go ahead, sir. Sorry.
Sorry, I didn't mean to cut you off. I just wanted to add SPACs to the conversation. So now there's IPOs, there's SPACs, there's direct listing with the capital raise. How does a company decide what's best? What types of companies will go which routes?
Well, look, I think one of the big reasons the SPAC market opened up was because the underpricing was getting worse and worse and worse. So if you cared about cost of capital, just like Stacey talked about when she was on the air, you'd never use a traditional IPO. Today's a super important day because I think it'll be very hard for anyone to argue whether it's a traditional IPO or a SPAC that's going to be better than a direct listing with a primary offering. This is so elegant, so efficient. It actually has fewer steps than an IPO. It's wonderful. I do think every single company will move this route.
Shepard Smith here. Thanks for watching CNBC on YouTube.